Well, good morning. This is Brian Kasal with the FourStar second half commentary. Clearly we've had a very interesting change of events in the economy. After two different revisions, the first quarter gross domestic product, or GDP, ended up negative 2.9%. That's a very, very negative quarter. If we have two quarters in a row, then that would make a recession. Interestingly enough, just last week we got a jobs report that came out with well over 200,000 new jobs created. That's one of the best jobs report we've seen so far. So it seems like the economy is starting to pick up. The explanation for the 2.9% negative is most likely the weather. So it does seem like the economy is getting a little bit better after kind of an air pocket, if you will, in the first quarter. So now we're seeing some job growth. And it does, there's always this sense of the moral suasion, like how does it feel? How does the economy feel? It does feel better. It feels like people are spending, people are more optimistic. We're starting to see job growth. Very often that the market is a leading indicator for the economy. So now we hear about the Dow hitting new highs every day. Well, clearly, if the market even goes up 1 point every day, then it's a new high. So the media tends to get excited about, the brand new high to brand new high, and they say it every day. Someone remarked it reminds us like the 80s, like it was a new high every day in the 1980s, similar to the way it is right now. So it's possible that the market is now signaling, a real economic recovery. Technically, we've been in economic recovery since 2009. But most folks haven't felt it, and the economy numbers haven't been great. We've been in a slow growth environment of 1 to 2% slow growth, and then of course we had this difficult quarter in the first quarter. Now the Fed is stopping their quantitative easing, and they were issuing as much as $85 billion new dollars to the economy every month. Now they're not doing that anymore, and they're tapering that, as folks have heard. So now, within a number of months, they will be no longer doing any of that quantitative easing. So it does feel a little bit better. We expect the economy to grow from here. And the markets have been growing, obviously, as well. Now, some say that the markets are somewhat detached from the economy. And to some extent, that probably was true. We call it the flow of funds market, where money is flowing to the line of least resistance. Cash is paying very little income. Bonds are low. We're starting to see yields go up a little bit, but they're still very low. And real estate used to be the risky asset alternative of choice when people were scared of stocks, but we had a big real estate meltdown, and a lot of people are not happy with real estate, so money's been flowing to stocks. So that could be one explanation as to why the market keeps going up. But now the economy is starting to signal things are a little bit better, so maybe the market is signaling a better economy. And that's our second half market commentary for today. We'll be back with more comments later.